Hello everyone and welcome to today's daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Friday the 2nd of August. Markets have had a significant turnaround once more. Donald Trump yesterday announced that there was going to be the imposition of a 10% tariff on Chinese imports of $300 billion worth of goods. Now, that basically means that pretty much all of the Chinese imports into the US are now subject to tariffs, and this came as a big surprise because previously the US had put on hold these tariffs, and it seemed as though that the trade negotiations were going to be continuing in the meantime. However, that has all changed. Donald Trump really surprised the markets, and there was a significant move against certainly initially against the dollar, but also safe haven trades jumped. $1,400 yesterday on gold was the low. It rebounded strongly into the close, 1442 in the close. We saw also the yen strengthening. The yen was above 109 big figure at one stage yesterday. Well, it's now back up underneath 107 big figure. And we've also seen, look at these moves on treasury yields, a sharp move to the downside on the 10-year treasury yield, which continues today, 184 on the 10-year treasury yield. That is record lows there. Also, the 2-year treasury yield falling sharply as well, so moves into safe haven plays as this trade dispute seems to be escalating ever further towards worst case scenario, and markets have been under significant pressure. Look at these moves on equities. We've seen the European markets all over 2% today. S&P 500 actually rallied at one stage yesterday. It was actually up quite around about 1% or so on the S&P 500, but then we saw the trade dispute coming in once more to hit sentiment, and a sharp move to the downside, and a really significant turn lower. We've seen that move continuing lower, another 0.5% on S&P 500 futures today, and it certainly looks as though that equity markets are selling sharply down. This is all coming ahead of the fact we've got non-farm payrolls today. Non-farm payrolls are going to create even more volatility this afternoon as the focus turns, I suppose, back to the US economy. The Federal Reserve, as per Wednesday's FOMC meeting, is now data dependent. However, certainly how the non-farm payrolls report comes out today is going to be crucial to market sentiment as well. So what we are looking for is payrolls of 164, down from 224, and earnings growth of 3.1%. Now, just show you that on the charts. That would be headline payrolls back underneath the 12-month average again, and also we'd be looking out for the earnings, average hourly earnings staying up around about 3.1%. But as I said, markets are still moving on this trade dispute, and it doesn't look all that happy at the moment. So, takes me on to my chart of the day, which is Euro Swissy. Now, Euro Swissy has been in consistent decline over the past 3 months and trending lower, but look at the amount of times you see downside breaks of key support bands. 111.60 to 111.80, old support, broken down, became new resistance. Again, 110.55, old support became new resistance, all forming this downtrend. And what we've seen in the last few days is the acceleration lower once more, breaking down below 109.60. That now becomes a basis of overhead supply, overhead resistance, and selling into strength, I think, remains the way to play Euro Swissy. We've got negative configuration on the momentum indicators across the board, turning lower, bear crosses on the MACD lines consistently, and again another bear cross. Similarly on the stochastics, another bear cross on the stochastics. RSI back under 30. There is certainly downside potential towards the low 20s, seemingly in the big sell-offs. So there's no real suggestion that that should end anytime soon necessarily. And you've got the downside break of 110.55, which really does open the downside once more. And if I get the crosshair even, 108.30 seems to be the next basis of real support, because where we are now, is breaking under these levels of support. 109.10 is an initial sort of line, but 108.30 seems to be that next key low from 2017 that the market is likely to track towards in due course. Any intraday rallies, I think, are a chance to sell. You've got the hourly chart, which shows 109.60, 109.80, 110 big figure. Again, another pivot line, and then above that you're looking at 110.25. So any intraday rebounds that you get on this payrolls report, I think, should be seen as a chance to sell on Euro Swissy. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our videos, or you can go to our website where you can join our trading webinars, of which I have a payrolls webinar today. So I'll speak to you later.